Hi guys, in this screen of the week, we're going to highlight our Peter Lynch investment model, which we base on the book, One Up on Wall Street. It is a growth at a reasonable price type of investment strategy. And we're going to use the Guru Stock Screener, and I'm going to show you how you can find stocks that meet the Peter Lynch growth at a reasonable price model and further ways to refine the list. So to get to the Guru Stock Screener, you want to go research Guru Stock Screener. We'll then be presented with a list of different strategies we can choose from. There's 22 different strategies on Validea. I had already selected Peter Lynch before coming in. You can select between strong interest or strong and some interest. I selected strong interest. So when we click add, we're presented with a pretty long list of names. The Lynch strategy actually does select a lot of stocks that meet most of its fundamental criteria. But there are various ways that we can sort that and try to get that list down. We have general and value criteria that we can add in. We have growth and profitability criteria, momentum and price change criteria, and then quality and ownership criteria. So there's a bunch of unique variables and other filters that we can add to the screen. So I'm just gonna isolate the top Peter Lynch stocks that pass the model in the service sector. So these are businesses that serve the consumer in some way, shape, or form. Think restaurants or retailers. It's still a pretty long list at this point, but we can do a couple things here, just as an example. Let's say we wanted to bring in a momentum factor, so 1 year relative strength. So we're basically saying we want to see stocks that have outperformed 70% of all other stocks in the market over the past year. We add that in. Okay, the list got much more reasonable and easier to deal with. Now let's say we want to add a quality criteria like return on equity. Let's say something like 18%, which historically in the US business, 13% return on equities average over time. So we added the 18% ROE in here. We got the list down even further. And then let's say we want to make sure that we're not in any micro cap or companies that are too small. We can add a market cap criteria in of at least 1 billion. So we add that. Okay, so there. So now we have a list of the 8 stocks that look good according to the Peter Lynch model, but that also have these other characteristics. Now let's say we wanted to apply this to the technology sector. We're doing the same thing. We're applying the Peter Lynch model, looking for strong interest stocks, and then those same criteria, return on equity, momentum, and market cap. And we have another 8 stocks, interestingly enough. And if we wanted to expand the technology list, we could remove the Peter Lynch strong interest and then select Lynch strong or some interest, which is going to show you stocks that score 80% or better. So we're widening out, we're making the screen a little less stringent at the strategy level. And as you can see, the list gets bigger, and there are some names in here you may recognize, including Microsoft and Apple. So this is just one quick example of how you can use the stock screener. We'll try to produce these screens of the week every week. Thank you. In the description below, I dropped in some of the names that pass the screen in case you're interested. You can go to Validea and run those through the various tools and strategies we offer. And also for those on YouTube that want to take advantage of an exclusive discount, you can go to validea.com/YouTube and lock in a special rate. Thanks.